Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is October 8th of 2020 and it is a Thursday. In our edition, we're going to talk about retirement and rollovers, the U.S. consumer, as well as 2020 and volatility and what it means to your portfolio. So let's get through our topics of the day and thanks for watching. So retirement is on the front and center, and rollovers very specifically. You know, anytime we have a recession, there's turnover in the labor force. That means that employees are either pre-retirees, go to retirement and they want to look at the retirement benefits, and they go to their plan provider and there's all these retirement options. Stay with your existing plan provider. Do I roll it over? And then if you look in the world of retirement, there's the 401k, the 457, the 403b. There's alphabet soup, if you will, under the retirement world. So oftentimes we get a lot of referrals from clients who have friends and family that are out there, or even coworkers that are saying, hey, wait, what do I do? The reason why you want to seek out an expert, because as it relates to retirement, because there's tax implications, but there's also a lot of benefits to you, meaning more control, more transparency, lower fees oftentimes when you take control of your retirement and you go from your plan provider. So before you pull the trigger on a what do I do on my retirement and ultimately roll over and what vehicle is right for me, because there's a lot of retirement vehicles on the other side, consult with an expert. And here at Blanke Schein Wealth Management, we do just that. The reason why we talk about this is because the labor force right now is just, we had over 25 million Americans claim unemployment. We just had a labor report this morning that the first time claims for unemployment, it was totaled 840,000. That was a little bit higher than what we were looking at. Which was the expected 825,000. But what also in that report is the labor force participation rate is down, which means there's a lot of people that aren't even looking for jobs or even now retired. And again, that then comes into one of your single most important decisions of your life is your retirement assets. And oftentimes you have more, let's face it, you have more than just one 401k out there or even IRA. You have several of them. And so that's a lot of not only administrative paperwork on a monthly basis, those statements coming to you, but it's a lot of unnecessary costs. And ultimately, oftentimes we find when we do analysis is underperformance as well. So you can improve your performance in many cases, lower your costs, and have better efficiency and transparency when it comes to the retirement age, or if you even have some. And most people change jobs throughout the course of their working careers several times. So there's always that 401k that's left behind. Don't leave it behind, because it could cost you in the long run. Time is money, if you will, especially if it's managed properly. So take care of yourself right now and take a look at that. And we're here at Blanke Schein Wealth Management to help you with your retirement as well as your rollover. We'll create that financial plan for you and put you on in the right way. But what's interesting in this first time claim number is it's down below 1 million. So now we're consistently below that million mark, even though we have, again, 840,000 that are claiming initial claims. And there's a couple of factors that are sort of interesting to find in today's report. California stopped reporting, so they didn't report in this number. So while it's 840,000 that are claiming initial, you would think California is the 5th largest economy in the world. That being said, that's either could add negative to this number if they actually reported, meaning more people are claiming, or it could be a net positive. And the reason why it could be potentially a net positive is because we live here in California and we're now experiencing the sort of rollback of restrictions. So we see it all over, as I've reported before. A lot of people are now moving outside their houses, and a lot of businesses are asking their employees to return back to work because you can go to restaurants now, at least for the time being. Who knows how that works out? But in several other establishments and several other industries. So California is actually getting back to work. So it's kind of interesting. A lot of economists right now are scratching their heads why California very specifically at this moment in time decided not to participate in this labor report. Who knows? This is 2020 and everything's political. Maybe, maybe not. We don't know. It could go the other way, right? If they reported, it could be over 1 million claiming unemployment for the first time. So, we'll just leave that out there. But it's important to note that pay attention to your retirement. We're here at Blanke Schein Wealth Management to help you with retirement benefits. There's another report by Hartford that came out about how consumers are actually spending their money. So the U.S. consumer, as we've reported, consumer confidence is on the rise. And as we've reported, the personal savings rate is all-time best ever in terms of savings as well as M2 money supply. That's the money in the banks in the system right now. So that then translates into this report that we're just talking about, that the durable goods, I mean, is actually, if you go to our daily updates, if you click on the details below, you'll get this chart. But ultimately, the chart breaks down the spending per income spectrum. And ultimately, those that are sort of more on the higher end of the income spectrum put more of their money in the savings. Those in the lower income spectrum, again, more of their stimulus money, if you will, on consumption. But the biggest rise all across the board was durable goods. So durable goods are goods that last more than a year plus. So you're thinking washer and dryers, you're thinking cars, if you will. The auto industry is at an all-time high. And there's also, obviously, housing is another one, not in the durable goods report, but housing is another one that's showing consumer confidence is needed, and it's a huge sort of foundational backdrop to the economics of the United States, whether it's, it's solid footing, and it's a positive number. So it just shows that the U.S. consumer is solid. They're making the large one-time purchases, maybe even multiple, and the housing market is on fire. So the U.S. consumer, all things considered, is doing better than ever, which is unbelievable. It's kind of interesting. And there's another final report that I have, which is the 2020 in volatility. Well, 2020 is the year of, we have the most 5% up or down days in the markets, S&P 500 specifically for this study. We have well over 8 movements of 5% or more this year than we did even going back to the most volatile time that we could look at, which was 2008, 2009. So we are crushing that number right now. We've reported this several times, right? There's a lot of volatility, and that's because of uncertainty. We're seeing volatility as I speak. As I film this right now, you got yesterday a tweet about we're going to walk away from the deal, no deal table. And today we have Speaker Nancy Pelosi saying deal, no deal. I mean, this is in saga that's going to continue. And again, it could be for political purposes, but it most likely is on both sides. And it's tragic because we have all these people that need the assistance that are out there, because there are long-term effects in the U.S. economy that need unemployment assistance and need long-term assistance for small businesses, because permanently they got hurt. And this is unfortunate. So hopefully we have Congress get back to work and agree to agree. I said many times, if you follow my updates, don't hold your breath, because that could be, pretty bad if you're waiting for Congress to act for the next stimulus. But markets are anticipating a deal. We don't know the size of a deal, but I think more importantly, the biggest question mark is when the deal will actually happen. Will it happen in 2020 or 2021? But something will happen at some point in time in the future. But that's just the update there. We have expecting a lot of volatility because there's uncertainty. We have the empirical evidence, as the most recent study, as I just talked about today, is showing that we expect more volatility going forward, right? We're just 25, 26 days away from the election. Hopefully we get some certainty past that. And then we have a backdrop to look at in terms of what we are going to see for 2021 going forward, economically speaking. So that's a lot to discuss today. I appreciate it. Again, retirement and rollovers. If you have any questions, we're here at Blanke Schein Wealth Management to help you. Any one of your friends and family as well. And take care and happy Thursday.